What's going on, y'all? I wanted to do like a quick little how-to video. I had a couple people ask me about Nadex and how to kind of understand it. I'm gonna try to put this in Cornbread language, make it as simple as possible. Um, I'm not gonna talk about call spreads and knockouts like you see right here. I know what they are. They are pretty neat stuff, but I'm not gonna get into it because most people who get on Nadex are only looking to trade binaries. Okay. Now, basically what you're going to do, this is a demo account, and you're going to choose basically what you want to trade. If you want to trade indices, if you want to trade a forex pair, they have events like non-farm payroll. They have crypto for demo. They don't have it for live accounts. Commodities like gold and silver, they have that also. So I'm going to choose a forex pair, and I'm going to kind of explain a little bit. Most everybody's favorite pair is Euro USD, but for some odd reason, oh, there it is right here. Okay. These are different time frames, and basically what these time frames represent is your expiry. And Nadex is defaulted to Eastern Standard Time. So if you live on the Eastern, like on the coast, then you don't have to change the time. I live in Central Standard Time, so I know that this is 1 hour ahead of me. Okay, so you just got to know what time zone you're in to kind of understand this. That's the first thing. So right here where it says 12 p.m. to 2 p.m. expires in 18 minutes. Here, my time is 12:41. So basically, it expires at 1 o'clock. That's what this first one does. Then there's another contract that expires at 2 o'clock my time. It says 3 p.m. Eastern. That's 2 o'clock my time. Then they have a daily expiry. This one lasts for 24 hours. And this one expires at 2 in the morning my time. Then this one expires 6 a.m. tomorrow morning. This one expires 11 a.m. Okay, so I'm just going to click the 11 a.m. one since it has a lot of time on it. And this is the mobile version. You can also do this over your laptop. This looks very confusing, but I'm going to explain it. All right. This right here says price is currently at 1,127.09. It just changed. So basically what these are all called tickets. All this red and blue stuff is called tickets. All right, and I'm going to explain what that means. All right. By 10 a.m. Central Standard Time or 11 a.m. Eastern Standard Time tomorrow, there is 21 hours and 17 minutes until that point in time. What if I say that I think price is going to be more than 11380 by tomorrow at 10 a.m. Central Standard Time? If I think it's going to be more, what I'm going to do is I'm going to go here and I'm going to click this blue button that says 575. Here's what that means. It's going to cost me $5.75 to enter into this contract. All right. The most I can lose right here where it says max loss is $5.75. The most I can gain is $94.25. That is good risk to reward in my opinion. Now, is it likely that price is going to close that's like 110 pips higher tomorrow? Not really. It's not really that likely. But it can happen. If there's news or something like that, then it can happen. All right. So that's a reason that someone would enter into this trade. Also, keep in mind, too, you can buy more than one contract. So, like, let's say I wanted to buy 3 contracts. It would cost me $17.25. And I would stand to gain $282.75. Okay. All right. That's if I believe the price is going to be higher than 11380 tomorrow at 11 a.m. Eastern Standard Time or 10 a.m. Central Standard Time. But what if you believe that it's going to be lower? Then instead of buy, I'm going to click sell. All right. And it's going to cost me not 25 cents. It tells you what your loss is right here. Max loss, $99.75. Your potential profit is 25 cents. Now, that is extremely terrible risk to reward. Extremely terrible risk to reward. Okay. Now, is it likely that it's going to earn you some profits? Yeah. because price is already below 11380 right now. All it has to do is stay below by tomorrow at 10 a.m. Central Standard Time. So that's the trade-off. High probability that you'll win the trade. Very, 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 very low payout. Okay. So let me go back. Let me see if I can go back to a different one. Now, notice that the prices change. That was the cheapest one right there. Let me scroll all the way down to the bottom and teach y'all a different lesson. All right, I'm gonna click this 99.75 one. All right, we want price to be above 1164 by tomorrow at 10 a.m. Okay. Price is already above 1164. So if you're going to enter this contract, it's going to cost you $99.75 if you're long, if you think price is going to stay above that price, but you're only going to get 25 cents in profit. Very likely it's going to stay that high. It's not going to go any lower, but very, very, very low returns. And if you lose the trade, then someone made a come up big time. Now, let's say I believe that price is going to be lower. I'm going to click sell. All right, and it's going to cost me $6.75. All right, so you can lose no more than $6.75, and the most you can gain is $93.25. That is what you call good risk to reward. Now, is it likely that price is going to drop? What is that, 106 pips? Not really, not unless there's news, but it can happen. So I'm just throwing that out there. Now, a lot of you are confused by the buy and sell here. This is the difference between the buy and sell is what's called a spread. And Nadex, unlike most of the offshore brokers, they charge what's called a spread on their stuff. So that means basically they have a certain bid price and a certain ask price. Okay. The difference is what they make. That's how they make their money. Kind of like how forex brokers have spreads. Okay. Also, Nadex charges a fee, like a dollar fee. But if you have anything over 50 contracts, I believe all contracts that are more than 50 of them, they don't charge the dollar fee. Another thing that y'all are really going to like about this. Okay, let's say I got into a trade. I'm going to get into a random trade right now, actually. This one right here. This is a at the money trade because price is currently, where are we? We're at 687 right now. Okay, 686. All right. And let's say I believe that price is going to be higher by tomorrow. I'm going to enter in this contract right now for a buy. I can potentially lose $47.25. My potential gain is $52.75. You add that up, you get 100. That's kind of how Nadex works. All right, so I'm going to enter the trade. All right. Now, let's say I guess for some reason price moves closer into profit. Let's say it becomes in the money. My contract is going to go up in value. And here's the kicker. And this is a good kicker, not a bad kicker. The kicker is when your contract moves in profit, it's going to gain value and you can actually get out of your trade early. Yeah. Like you can't do that with these offshore brokers. You can't do that with Pocket Option. You can't do that with Forex. Like if you're in the money and you want to exit your trade, you have to wait till expiry. With this, you can actually get out and collect your profits before you get a reversal. Now it's going to charge you $1 fee for exiting the trade. But if you are well in profit, you can exit and that dollar is hardly nothing. You know, you can make up that dollar. Or if you're at a loss and you want to cut your losses, then you can actually exit the trade early and limit your losses. Like you won't lose the full $47. You'll lose some of it. And that's how it works. Now, me personally, when I trade, this right here is gambling. I just did an arbitrary trade. I did not analyze the markets or nothing. But this is a demo account, as you can see at the top. But here's what I do. I don't trade Forex. I trade indices. And with indices, the one I trade in particular are the Wall Street 30 and the US 500. That's basically your Dow Jones and your S&P 500. And every day at 8:30 my time, I get on the charts and I do what's called a non-directional bias trade. Some people in the stock market, people who trade stock options, they call it straddles. I think either straddles or strangles one. I can't remember the actual term. But I enter into the trade, and statistically, you can get at least, most of the time, you can get anywhere between 15 to 20 points on the S&P 500 in the morning. On the Dow Jones, you can get most of the time 100 points on the Dow Jones between 8:30 and 10 o'clock. Okay, and here's why I say that that's important, is because right now price is 46.63 and I go 20 points higher to 46.83, then I can get in for cheap because the prices are out of the money. Now, they're not normally this low because, you have a different volume of people in during the morning time than you have right now. So, some people will want more for their contracts or less for their contracts and things like that. So different factors come into play. I also use this for news on the dollar because most indices are inverse the dollar. So I do trade the news with this. It's not like forex where it's dangerous to trade the news because there's a maximum loss that you get with this platform, as opposed to with the MT4 platform where your stop loss can be gapped. Okay. All right. But anyway, like let's say I got into a trade right now for where it says like $20.50. All right. And let's say price moved up 8 points. That price right there of $20.50 is going to change to $50 per contract because price went up to at the money. It was out of the money and now it's in the money. Okay. So these are things that I look at. I know it's still really technical and everything like that, but like once you practice it on demo, because it was hard for me too. Once you practice it on demo, it becomes really easy. Really, really easy. But I'm going to keep this recording. I'm not sure. I might post this on Instagram at some point. But if you all got some value from it, if you got some questions about it, just let me know. I'll try to set up a Zoom. I'm not really good with Zoom, but I'm going to try to set up a Zoom and help everybody out with this so everybody can be eating off this like I am. All right. All right, y'all. Happy Monday.